Good afternoon, everyone. I have had several calls in the last couple weeks from people who are interested in buying a home but have never purchased a home before, and or have credit issues or have experienced a bankruptcy. So that has been my inspiration for today's very basic understanding lesson on credit, how to get it, how to build it, how to repair it, and bankruptcy, how you buy a home, how you can buy a home after bankruptcy or sometimes during your probation period of bankruptcy, depending on the bankruptcy that you had experienced. So I made myself a little board here. It's not fancy, but it will keep me in line, on track, because otherwise I will spiderweb. And so when it comes to credit, people say, well, I don't know what my credit is, or no, I don't have good credit. So basic credit information. When you buy a home with a conventional loan through a normal mortgage broker that's going to shop around to get you that loan, you will usually be required to have about a 620 or above credit score. Okay, and that's with a minimum of 5% down. Now, sometimes it depends on the financial institution you're going through. Sometimes they will go lower on the credit score, but they will require more money down. Oftentimes here in Corpus Christi, we're familiar with credit unions that will finance people with sometimes as low as 580, 550, sometimes 500. If they know your work history, they require more money down. So I've heard some really interesting stuff. So when it comes to buying a home conventional, it's usually they want that 600, 620 and above, but once again, you can go significantly lower with a private mortgage credit union, or it will just depend on the institution that you're using. Now, when it comes to FHA financing, once again, the individual lender will determine what your required credit score will be that they accept, okay? And they're going to evaluate your cash, your payment history, they're gonna taxes, everything. They're gonna evaluate everything. Now, they may go really low too. Once again, it's based on the independent mortgage broker when you go FHA. Now, why do you say conventional FHA? Conventional is not backed by the federal government. It's not insured by the federal government. Okay, VA loans are offered to military personnel. Okay, VA loans, if you've served time in the military and you have your DD, 214, I'm blanking, form where you can prove that you qualify for the VA loan, then you can get a VA loan. And VA, depending on the lender, once again, usually it's about a 620 credit score. A lot of times I have people say, man, I need help with my credit. What should I do? Now, I'm going to give you a very interesting situation I went through, and it kind of gives you a tangible example of both of these scenarios: poor credit, bankruptcy, VA loan, all in one. I had a buyer who was in bankruptcy. They had been Chapter 13, and they had been in bankruptcy for 2 years, and they had adhered to their terms perfectly. And it turns out they called me. They said, oh, we won't be able to buy for a couple years, but they called me back and said, oh, we talked to a lender and they said we could buy now if we get court approval, and we will increase our credit. Meaning I think he had like a 590, 595. Him and his wife had like a 590. And so I told the lender, I said, I have no idea what I'm doing, so I'm just going to trust you. So what happened was we went and applied for court approval, and that's usually 10 days, but I would say to be safe, give yourself a 14-day option period, and be sure you tell the listing agent what you're doing. We're in bankruptcy, we're trying to get court approval, and we need to build our credit. That's what I did. I told the listing agent, hey, we don't have cash for closing costs, we need you to pay our closing costs. Hey, we need court approval, and we'll get that to you within 10 days, and if we don't have it, we're not going to tie you up. And we have to build our credit, and we need 60-day closing because we have to bring up our credit score. But if we don't do this, we'll tell you exactly how we're doing. So anyway, you get a prepaid credit card, okay? Now, this is a general lesson. You have to talk to your lender, get your credit score, get your credit reports first before we can determine exactly what you need to do. But in this case, everything was being paid on time for the last couple years. Everything was looking good. We just had to get up that credit score. So the lender said, get a prepaid credit card. So we called around for prepaid credit cards, but oddly, some of them would not give one of my clients a credit card because he had had bankruptcy. And so we went through First Premier Bank and got a MasterCard. First Premier Bank got a MasterCard credit card. And what you do is you put, sorry, I'm sniffling. We kind of went around the cold this weekend. We started fighting the cold. So they put about $300 down, and that secures the card. And the trick is you charge about $5 to $10 a week, and you pay it every couple weeks. You just keep paying on it regularly. Another thing you could do, which they didn't necessarily have to do, is do not pay off all your credit cards. Do not close them down. Do not pay them off. Pay them regularly. You might want to pay them twice a month and maybe increase the amount by 100, whatever you can. Come here. My dogs are freaking out. Come on. And sorry, they were getting excited. They were playing and they were starting to get hyper. So, but you pay them regularly. If you pay them off, it hurts you, okay? More often than not. Now, if you're going through a loan process and your lender says, okay, let's pay off that car, or let's pay off that debt, that's another story. But in general, wait till you hear from your lender and a professional before you run ahead and do anything. Okay, so in this case, we got the prepaid credit card, and I'm not kidding you, within 2-3 weeks, his credit went up to the 620 that we needed it. Now, I'm not saying that's going to happen with everybody or every card, but I know I was shocked. I was like, oh my goodness, we already have a 620. So we got our credit up, we got the court approval, and then at the end of the deal, the lender calls us and says we were denied. And I said, oh, you've got to be kidding me. I said, we did everything you told us to do. We brought up our credit, we got court approval, we got the seller to agree to this and give us, 10 grand in closing costs. And he says, and I said, what happened? I said, we did exactly what you said, and I told you I didn't know what I was doing. And then he kind of mumbled, and he basically fessed up that he calculated their debt to income wrong, which means how much debt you have versus your income, and there's certain ratios, okay? I think he calculated their debt to income at 47, and he thought it was he needed a 45. That's how he had it calculated before, at a 45. And I said, well, you've had all the information from day one. What do you mean our debt to income? Nothing's changed. You've had this from 45, 50 days ago. Why are you telling me this now? And he basically made a mistake because he counted alimony towards the ex-wife as income. And by the time we were in underwriting, he didn't catch it. So please, buyers, realtors, I have a photo bomber. She's kind of cute though. I see her. Pay attention to these things. Make sure, if they're divorced, ask about, are you paying anyone alimony? And let's make sure that happened on a deal I'm selling right now. The lender at the end of the deal, the buyer's agent, and the buyer, the lender calculated the DTI wrong, and the poor buyers, not their fault, had to come up with money to pay things down. So anyway, just as good realtors and lenders, let's make sure we do that kind of stuff and be very careful. So anyway, thank God the selling agent was awesome. The selling agent said, why don't you call this other lender? They do these all the time. And I'm sure if these people are solid, you'll get it done. So long story short, we went to another lender, gave them everything. Everything was ready. And it turned out that they got approved in about 3 weeks, and it saved them, I think it was close to $100 a month. But it was a very stressful, terrifying situation. But look at all that wealth and knowledge I have now. And the people have an awesome home, and they got a great deal, and it was just really, truly miraculous. And they had bankruptcy. So with bankruptcy, I have a little, before we move on to bankruptcy, well, it kind of ties in, but you can get free help with your credit, okay, from me, but I'm not a pro. So if you want to take classes and go in greater depth, I can help you through some basics and tell you, okay, let's do this, start with this. But, after we kind of talk a little bit, you might want greater help. You might even want to pay somebody to help you with credit repair, make sure they're reputable. I know I just got a friend request today from someone I think that does that, so I can't vouch. But Catholic Charities charges $30 for a single person, $35 for a joint couple to help them do credit repair and understand their credit and get on the right financial track, and even budgeting to help them get to the place where they can budget better and either they're buying a house or just pay their bills. So Catholic Charities here in Corpus Christi will help you with your financial status whether you're buying a house or not, for a minimal fee of $30. If you simply can't afford it, they will do it for free. So don't take advantage of them just because they can be free. For veterans, VA purchasers, there's Veterans United, and it's called Lighthouse Program, and they will also help veterans work on their credit and stuff for free. Now when it comes to bankruptcy, okay, there are two types of bankruptcies that you can buy a home, you know, soon thereafter. Well, not soon, it just depends. There's Chapter 7, and it's called a clean slate. Chapter 7 says, okay, they call it the clean slate. When you do the Chapter 7, you basically have everything liquidated and you pay off everything you can, and they just say, okay, you paid what you could, we're forgiving your debt, you're moving on. But you still may need, that you still may or may not qualify for a home within 2 years. You might though. It's going to stay on your credit for 7 to 10 years though. Okay, now in Chapter 13, bankruptcy, you can buy a home depending on court approval, once again, after about 2 years, if you've adhered to the guidelines and paid everything properly and followed the payment plan, and then you get court approval. Okay, and it's going to depend on, once again, your lender. Once Chapter 13 can come off your credit report usually sooner than maybe 3 or so years sooner than a Chapter 7 bankruptcy. But either way, you can still buy a home. The clients that I told you about, they were 2 years into their Chapter 13, and they had 3 years to go, but they were approved by the judge to do it. Okay, so I think if you've completed your Chapter 13, you know, it's been 5 years, or you completed whatever the term was, and you've it's been discharged and dismissed, it's up to the lender to determine whether or not they look at all your stuff and approve you or not. Okay, so with that being said, this is not like, oh, you know, this is everything, but this is really what you need to understand before you just start moving along. You can build, I think, if you get your own credit report and you look through it and you go, man, that debt was already paid, or I already paid those hospital bills, or man, I need to contact them and get a payment plan going, or I wonder how much they'd let me pay, or would they forgive part of it. You can call your debtors and then say, can you work with me on this, and start getting those paid and get that credit building again. And creditors don't want to see that you use your debit card and pay everything off every month. Okay, I had a situation where I had this amazing buyer, you know, and they paid everything debit. Everything was paid off on time. Gas was paid on time. Groceries were paid. Everything was debit card. It was paid. They were great. Solid. Creditors don't care. You're paying yourself. They want to know if you're going to pay creditors. So paying with your debit cards regularly is not enough. Okay, you need a real credit card, 2, give or take 2. Prepaid credit card if you don't have credit at first and you're building that credit. And even if you already have credit and it's messed up, maybe you close 1 or 2 depending on how many you have, and get one of those prepaid and start getting that paid off regularly. Do not charge more than $10. It's your, call it your Starbucks card or your lunch once a week card or something, but just keep it to a minimum and pay it regularly. And of course, pay your other bills on time. Okay, with that being said, it doesn't mean you shouldn't go to a professional credit repair person, but a lot of times it's some pretty basic stuff. You pull up your credit card, you call them, you call the companies that shouldn't be on here. I already paid that. And then, oh, I didn't realize I still owed that. Okay, and take care of it. You can do it. You're paying someone else to clear all this up, write letters, get it forgiven, and sometimes you need them. I'm not saying they're not fabulous for the right situation. I'm just saying sometimes people don't understand that it doesn't have to be that complicated. Okay, so those are the basics for today, and I'm going to finish this up. And sorry for those of you who joined late, because that was a pretty informative video, and you're going to have to watch from the beginning. But have a great day. Today it's absolutely gorgeous here in Corpus Christi. It's like 70 degrees. It's clear. It's beautiful. We had a water scare again, but don't worry, it was recalled. There was some sort of pressure concern over at the Flint Hills again, but it was contained and everyone's still panicking. But don't panic. If you need to be safe, go ahead, buy some water, but it was repealed. And I love my city, even if we all sorts of drama, because all cities do. Anyway, have a great day.